Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, January 26th, 2019, and in this week's update or video, I want to review the comments that the CEO of Cameco made last week at the CIBC Institutional Investors Conference up in Canada. I haven't seen a lot of articles or information about this, so I want to go over some of what I think are the highlights of what the CEO said. I think it's very important considering that Cameco is the second largest producer of uranium in the world and pretty much is one of the 800-pound gorillas, and certainly the CEO comments I think are very appropriate and newsworthy. So I will put a link to the Cameco website. It's right there. You just have to go on. It links through to the CIBC website, and then you have to register and you can listen to it. It's about 25 minutes. I suggest you listen to it. The first 15 or 20 minutes are specific to the uranium market, and then the final part of the presentation is about Cameco, specifically around the CRA settlement and corporate issues. So one of the first things was discussed basically was a review of what was going on in the uranium market and what Gitzel's comments were. You know, he said that Cameco bought a couple million pounds in the spot market last year. That was kind of the review. He did make a comment that they are looking to buy 12 million pounds in the spot market in 2019. Now, I mean, what I think is going on is what somebody on Twitter said, which I thought was a good explanation. Besides the fact that, you know, they've already said that they're not going to pull these choice assets out of the ground in McArthur River and Key Lake and these places and sell them at cheap. It's just easier to go in the spot market. But what I think they're also trying to do is, you know, get that spot price up closer to what's, you know, the term prices are, so that when these fuel buyers go out and go to their management to start buying fuel, they're not being asked the question of like, well, why do you want to get into a contract with Cameco at $50 a pound when the spot price is $29? So was an acknowledgement that there's supply out there and they're going to do their bit to soak it up. Another thing is they said that they put out about 4 or 5, I think it was 5 RFPs, requests for proposal. They're trying, part of that is obviously to soak up material. The other part is to see who is selling, trying to get market information. One of the things he did say was that the Japanese were not sellers. That's been some speculation that the Japanese have all this inventory and they're going to sell it. He said that that was not the case. He didn't really allude to who was selling, but it's not the Japanese. The next comment's probably not going to be what a lot of people want to hear, but he did say that the price recovery in uranium is going to be a marathon and not a sprint. And that's kind of what we think, what I think also. That's why I really haven't been super big buyer of a lot of these juniors mining companies in the uranium space, because I've been really worried about the dilution. I've been sticking with just buying the spot or buying physical uranium and buying like Cameco. I think there'll be a time to buy the juniors. I own a few juniors in the portfolio in the Actionable Intelligence Alert, but they are very well cashed up in my view, and I'm not so worried about them. I am nervous though that this could take a lot longer than people think. And, you know, if you do not produce any revenue in order to keep the lights on, you will have to issue more shares. So it's something to think about. I don't think anybody really knows what this is going to look like. But as I've said before, my view is that this will be a longer, drawn-out process than most people think. This is very interesting. I think one of the things he did say, and there's been a lot of speculation on Twitter and other places and comments that I've seen, he did say that he felt that Article 232 here in the United States is the biggest struggle right now to the uranium price recovering. I put it in quotations here. He believes that this is currently paralyzing utilities because they really don't know the outcome. And it makes perfectly good sense and logical sense to say this, because if you don't know what the Trump administration is going to do, if they're going to not allow you to buy Russian-based uranium or whatever, they're going to force people to buy a certain amount of uranium from the United States or Canada or wherever, friendly locations, if you will, you're kind of paralyzed. Even though you probably need to get into the market, you're not able to, because you really don't know the outcome, and you don't want to be offsides on that thing if it comes down to where you're not allowed to buy from certain countries. So I thought that was, a good comment. Obviously, I did get some emails about this week. I mean, the current shutdown is going to affect the government shutdown, which was, alleviated yesterday temporarily, but at some point this will get resolved, this 232 ruling. And the bottom line here, guys, is that every day that goes by, you're burning up pounds of uranium that aren't getting replaced. So tremendous pressure is building behind the dam, and if this is in fact correct, that this 232 ruling is hamstringing or paralyzing people from making decisions, then it's just a matter of time, and that will get resolved, and then we will see the dam break, and hopefully contracting by utilities. He was asked about when would McArthur River come back online, and I like the answer is basically, even if the price of uranium was to jump to $50 a pound tomorrow, they wouldn't bring it right online immediately, because it would probably drop the next day after they announced it back to 25. So they want to see sustained prices. They want to see long-term contracts, sufficient volume of long-term contracts that would allow them to turn the mine back on and fill those contracts at a price that is profitable and makes sense. Comments about the recent Yellowcake and Uranium Participation Corp purchases of uranium, and the entry of hedge fund money and private equity money into the purchase of uranium. And the comment was that this could very well act as lighter fluid on a fire once this thing gets going. That's something that I agree with. Quite frankly, I go to this whole thing based on the fact that if your cost to mine profitably all in is $55 to $60 a pound, and you can only get $29 or $30 for it, no one is investing in these markets. That is how commodity markets make you a ton of money. These are depleting assets, so you're basically in liquidation. You're living off previous investments in mines. There's no mines being developed. There's no investment going into this. There's no permitting. There's nobody talking about building any mines. And yet you continue to consume the material at about, 180 to 190 million pounds a year. So eventually that results in a severe deficit, and the price will go up sufficient to draw enough capital in to bridge the supply-demand gap. I mean, that's how simple it is. It just takes time. And so we'll just have to see how that works. And if you have some artificial demand, if you will, or some private equity money, it's not a lot. It's not little money either. Big money is coming in and buying, physical uraniums. It's going to exacerbate the move and exacerbate the possible shortages. Interesting comment. He was just him and his team. So his team had just come back from Japan, talked to some of the utilities. And I like the comment about the demand pothole that was created by the Fukushima shutdowns has basically been filled in now with all the new reactors that have come online in other places, and the fact that we have 9 operating reactors in Japan. So all that demand that went away has now been filled, if you will, or has been accounted for with new reactors that have come online in the years since. So any new reactors that come online in Japan, or any new reactors that are built anywhere in the world, is just adding to the demand. So it's kind of consistent with what we've been talking about. I did like the comments specific to the 232 resolution and the fact that that is paralyzing utilities. We kind of speculated that was the case, but this kind of confirms it. This is going to be a short video this week, guys, but you know, I'm going to put a link here. I think you should listen to this video or this presentation. I'll put a link to it in the comments section or in the description section, and it will help you maybe clarify a few things for people. I know people are thirsty for information on the uranium market, and I didn't really see anybody posting about this or really talking about it definitively, except for maybe a couple people on Twitter. So I hope this helps you out, and this is why that's why I make the videos, try to get this information out to people, and in a timely manner. We don't always see all this stuff coming out like we should. So appreciate it, guys. That's it for this week. Please continue to support the channel. If you do not want to subscribe or do not want to be a Patreon, you can still help me by subscribing or hitting the like button. Really appreciate the viewers and the comments. Keep them coming. I do get a lot of emails. I try to answer them all. If I don't answer you, it's not because I don't want to. I just have so much time, only a certain amount of time, and maybe I haven't gotten to it. So I will try to answer as best I can, and I try to interact with you guys in the comments section. So that's it for this week, and we'll talk to you next week.